Oh my gosh, can you see it? Can you see $100,000 Bitcoin? This is absolutely shenanigans. Unfortunately, unfortunately, I have done it again. I have basically been able to record a video that would be beneficial for everyone, and then found out at the end that it is just a video with no sound. So isn't that the best? So we're going to dig back into this. I have deleted several of the markers on here as I told the story to myself. But basically, the gist of it is this. We are at a high of literally $99,000. Let me show you this. If you look right here, up in this corner right here, it says H. That's the high. It's kind of tiny. But it literally says $99,000, $99,073.53. That is literally less than $1,000 away from $100,000. And so I want to walk through my thesis in the Facebook group about really why I said we might get a pullback. This was kind of my theory that we really would essentially get rejected here, maybe get a little bit of buying pressure, and then it was going to reverse. Now, some of the philosophy on this is really just because of what else is happening in the economy and the market and stuff like that. But really what I needed to happen, as you can see in my note here, is that I need a close above, which is pretty good to invalidate it. But maybe my line is off. You never really know. And so for me, I always want a confirmation on that next candle, right? I want a red candle here. I want something to close below this line, or at least close below this. Specifically, I said I wanted to close for below 94,000. Because there was a lot of pressure right there. And so obviously when this candle opened, boom, there it goes, it took off, and obviously invalidated my entire idea. And that's okay. Cool, not a problem. We'll keep it going. And so really, where does that leave us? And it leaves us in a situation to where we are on a run, and it is pretty likely that we're going to see $100,000, which is what I have this little indicator at right now. When that hits, it will actually tell me that we're at $100,000. So why would I think that it was going to go down? And really, what invalidated things? And what am I thinking as of this moment? Well, really, what I'm thinking. Let me kind of do this. Let me move this out of the way here because I want to show you a couple of different ideas. The first idea that I have has a lot to do with, I say this, let me explain the theory first. So the reason I thought I was going to pull back is we've kind of already got a little resistance here. It's been consolidating. And more importantly, what's been happening is we have a lot of money that's been like just sitting idle. And we've had obviously a ginormous run up here. And so it's like, at what point does it pull back? The reason I think it might pull back is solely because we've got a lot of options that are now on the table. We've got the S&P, which is kind of stalling out, but the stalling out is also what invalidated this. I'll explain. But really, if we were gonna look at the upside and we were gonna look at the downside of this theory, what would that look like? So I kind of expected to get a little bit of rejection here as a way to essentially rope in retail traders who would try to get in right before $100,000. Because once it hits $100,000, in theory, $100,000 is a very strong level, like psychological level. Once it goes above $100,000, it may not come back down as $100,000. You really don't know. It could go up and it could act as support, and it just stays above $100,000 now. Or it could kind of fake everybody out. Hey, we're going to get to 100,000, 101, 102, 105. Kind of get everybody to buy in. Oh my God, it's over $100,000. What's it going to go to next? Cool, get everybody in. And then it reverses, right? Which is really what I thought was going to happen here. And so when I look at this, I obviously am looking at the upside and the downside of the plays here. The downside is obviously we have a couple of different things. Number one, we've got all this consolidation right here at 90,000. More importantly, we've got wicks about 94,000, which is where we had previous support or resistance. So $94,000 is kind of my line in the sand that I want to see it close below, and it didn't close below. And instead it went up. So we're going to talk about the upside in a minute. But on the downside, what I am expecting is on the way down, there's only a couple places it could stop. Obviously, 94,000. It could stop in this consolidation area around 80,000. It could, or, I'm sorry, 90,000. Definitely, you could come down, kind of do this. Obviously, this line that has been really good support and resistance. and it could bounce around in here if that makes sense. On the downside, and there's one more gap in here I'll tell you about in a minute, but really 73,000 is the most logical thought at this point. It makes the most sense that we would actually go all the way down to 94,000. And really here's why, or I'm sorry, 74,000. And really here's why is it kind of is the last level of support. Now you don't really see it as, a common theme, because really if you get like these bull flags that run up, they kind of sell off. They don't typically sell all the way back down to the previous level of resistance that would now be support. You did see it here where this guy came down and really kind of tagged that. But this is the most logical level, knowing that we've had a high here, we're retesting highs, finally break the high. It makes the most sense to come down to 74,000. And if it doesn't happen there, it'll obviously hit maybe some of these minor trend lines, but the more logical one would be this green line. And then obviously the bottom of that channel, which is just highly unlikely. 50,000 to go from 100,000 to 50,000 would be, oh my gosh, absolutely bananas. So with that being said, the only other place, I'm kind of scrapping these two orange lines and down. $74,000 is probably like really the lowest it's going to go. It's more likely to go to this $90,000 or $80,000 level, and that $80,000 level is solely because that CME gap, the futures gap, is wide open. Right now, it is a magnet that kind of pulls price towards it, and they do get filled roughly 90% of the time. But when you look down here, we had that big gap down here at the $20,000 level that will probably never, ever get filled. And so maybe that's the case here. Now, this is highly likely to get filled because chances are, with these being really kind of previous highs, we're probably going to go up real high. We're probably going to come back crashing down. And maybe this will be the new lows in the next cycle. You don't really know. We could also have an economic event to where it just kind of wicks down, fills that gap, and then the market feels like it's tested things. But this gap right here, it starts about 77, goes up to about 80. So really kind of somewhere in that range would definitely make sense. If we were to come down. Now, if we were not to come down, which eventually it has to happen, and I'll explain kind of the bull flag scenario here in a moment. But really at first, why is it really running so high? Why is it running so fast? And why hasn't it stopped yet? There's a couple of things that have happened, obviously. In our country, we have a president-elect who is very pro-crypto, and obviously that's going to drive some attention towards it. Trump has also been meeting with a lot of crypto companies. Brian Armstrong, the CEO of Coinbase. We've got Backed. They're considering acquiring Backed. All these different conversations. And Backed has done, literally just on the conversation, look at this ginormous green candle. This is just silliness. Holy cow. So the point is there's a lot of attention on crypto right now. But why is all the money flooding in? The money's flooding in into crypto right now because the S&P is doing literally nothing. And it looks like it's doing something, but let me just explain. I made a video in the past about how $6,000 is probably the top, is a very psychological level. Maybe it goes up a little higher, but at the end of the day, you have this channel that I'm gonna have to go to a weekly or a monthly chart. You have this channel that we've really kind of been playing around in, right? We've been on the bottom half of the channel, and then we went up the top, and this is from 2000, right? Big run up, sell off, 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 over and over again. And 6,000 is at the top of the channel. So now we have this position to where it's not only a round number, it's at the top of the channel. We've had a big run. Are we going to see another big run? Yeah, very possibly. We kind of look at really in the past, what has caused some of these other runs to happen? Well, really this is like obviously inflation, really kind of growing in the economy. There was the dot-com bubble. This was predatory lending and obviously stimulating the economy in that way. Sold off. We printed a bunch of money. What happens when we print a bunch of money? Obviously, it goes running up. Congratulations. But then we had COVID. What do we do during COVID? We printed a bunch of money. So we print a bunch of money, and that kind of pauses for a minute. And here's the sell-off after we've taken all our profits from all this stuff. And now here we're back in this thing where we're trying to figure out what's next. Are we going to start printing money? Probably. But at the end of the day, we're going to find out if there's an approach outside of printing money. It's been a constant concern for an extremely long period of time. But really, there hasn't been anything happening here. And really, when you look at this, like, kind of take a look at how many days it's essentially been flat. Like, really right in here, I would say, is I could call this flat. So this is, how many days is that? 38 days. You can see it right here. So literally for 38 days, nothing's been happening. And if you even want to get more specific, you know, really we're looking at is nothing's really been happening in here from here to here. That's 15 days. So nothing's been happening for 15 to 30 days in the S&P because we're at these levels. So where does money go? Money goes to another risk on asset, right? Guess what's risk on right now and absolutely going bonkers. And for how many days? If we go to back to the election, oh, look at that, 15 days. So literally for 15 days, as the S&P has been doing nothing, people are looking for returns. They're going to put it somewhere that is doing something, and that's going to accelerate and cause that risk on asset to go even higher. And so while this is unstable, it's becoming more unstable because S&P is not really doing anything. On top of that, you have the Bitcoin dominance. The Bitcoin dominance, I have a little bit of a stoplight type of an approach here to where in the past I talked about how this is the range, 57 to 60%. It's really kind of the pretty strong range for resistance. And if it goes down, that's going to be alt season, right? Well, when you look at this, there's kind of like, this is the most likely, this is probably the less likely, and then this is pretty crazy. If you're in this 63% area, it's pretty ridiculous. Like there's other news that have come out, maybe about securities in these other coins or something like that. And so we've blown through this. Now we're up into here. We could continue to move up again, meaning that all the money in crypto, this percentage is in Bitcoin specifically. So S&P has hit a top, right? A nice round number. The resistance for Bitcoin has hit, again, resistance, right? And we've even got kind of a, this is resistance, so this is even more resistance. This is even insanely more resistance. And then last but least, we have our valuation between the two biggest coins, Bitcoin and Ethereum. And then just for those who don't remember, this is a Ethereum Bitcoin pair. Normally you have the asset you want to buy here on the left, and then you have USD, the thing you're going to trade it with. So we're going to take our asset over here, we're going to trade it for this stock or this coin or whatever, and we're going to sell it, and we're going to come back into this USD coin. Well, in this case, I'm taking the Bitcoin that I have, I'm trading into Ethereum. When I sell my Ethereum, I'm going back into Bitcoin. It is a way to accumulate more Bitcoin. And right now what you see is literally that Bitcoin's been pretty strong in performing basically for the last 2 years. Strong performance of Bitcoin, really weak performance of Ethereum. In fact, if you look at Ethereum, it has not even broken its all-time high of $4,900. We're literally still under. Meanwhile, Bitcoin is on like this freaking crazy tear of like 40+%. And so really when we look at this, I got to make this logarithm, or I've got to make it regular because of how I drew the lines, but you can redraw the lines and they'll look the exact same in logarithmic. But there's been this this lighter yellow line where you really see kind of a lot of the resistance here, support, where it comes down and bounces off, comes under, now it's hitting it, it's coming. So again, support and resistance, right? And that goes along. And then this yellow, dark yellow line is really the strong line, right? You've got the bottom here, you've got the bottom here, the bottom here. This tried to come down. And so this is really kind of where I started adding to my Ethereum position, was kind of in this range, right as we hit this line. Obviously, I felt pretty smart for a hot second, and then Bitcoin just took off like a rocket. And now where are we today? We're literally at this next yellow line, which has been pretty consistent support and resistance, as well as it happens to be the bottom of this big channel going down. Now with this big channel going down, this is two basically indicators that tell me, all right, Ethereum's in a spot to where it's most likely going to bounce. Now, obviously it had a bounce. We'll see if it happens. But we have the S&P stalled out. Bitcoin's at a local top. The dominance is pretty freaking high. And the Ethereum Bitcoin pair is at a pretty strong level of support as well. And so what's most likely to occur is that really Bitcoin kind of needs to take a break and sell off for a little bit. And Ethereum's going to have some moments to shine, right? It's been waiting for a couple of years, kind of keeps finding these levels of support. It literally doesn't mean that this is the bottom level. It could come down. I mean, oh my gosh, it could come all the way down to here. Probably not very likely. It's more likely to hit kind of this level first and then this level first, these lows previously. But these are levels at which I would be adding to my Ethereum position on, especially if I'm trading an Ethereum Bitcoin pair. So if I sold my Bitcoin for Ethereum right here, and then Ethereum, starts to perform, and I trade it from Ethereum back to Bitcoin right here, I would have 130% more Bitcoin than when I originally started it, sold it. And so it's a way to start with 1 Bitcoin, now go into the next performing asset, now change it back to Bitcoin. Now I got 1.5 Bitcoin. Now, so it's just a way to kind of circulate the money and scale quickly. But these are really kind of some of the reasons that I kind of feel like we're at a little bit of a crossroads on kind of where we are. And kind of the other thing too, and I think we have to pull up a different chart, I've got it somewhere else, is, and now we got to go back to logarithmic. I should just stick with one. But really where we're at on the downside, I've already explained it. 80,000, 90,000 makes sense. 94 makes sense. But really where we're at right now with a price of $99,073.53, dude, we're pretty, like, that is essentially, what do they call it? They call it, like, basically in spirit of 100,000. So sometimes you see these really weird moves where it never happens. I don't think that's the case. In 20 minutes and 21 seconds, we're about to find out when this candle closes what happens. As long as this wick doesn't get a lot bigger, we're in pretty good shape. But my thesis was invalidated as soon as the next candle opened and never came back down. Invalidates my original thesis. And so I'm going to have to look at that next level up, which is going to be that $100,000 mark. Now, do we go over 100,000? Do we stop at 100,000? All that is that's debatable. A lot of altcoins have already sold off so that money can go into Bitcoin. Bitcoin's pumping. It's going to reverse where Bitcoin will eventually kind of consolidate, do not much as money leaves Bitcoin and goes into the altcoins. But we've got to kind of jump over to this chart to talk about the upside. So obviously we had this video that I did where I talked about the previous breakout, right, above the high here. It runs up and then it runs back down, right? So if we ballpark it here, we're talking about 21%. And then when we break this high right here, we're going to run up to the top. And then where do we fall back down? Now, this was a really big one. I can't see the line exactly, but somewhere around 30%, right? So now the question is, here we've broken out and we're going to go up and then we're going to sell off. What does that look like? Well, when you look at kind of the comparison of these assets, knowing that this is a 50% growth, this is a 50% growth, I projected this could be a 50% growth, would put us at $110,000. What does that sell off look like? Well, 10% obviously brings us down to 100 grand, which we support. 20% is going to bring us down to about 90. Where are you? About 88,000. And then if we come all the way back down here, which is not as likely, that's a 30%. So we're pretty much in a pretty good spot. Like I said, I really don't see it going from 100,000 to 50,000. That would be, oh my gosh, terrifying, scary. And I don't know, I'd be excited at the same time because I would try to buy more. But that's kind of where we're sitting on the downside. This is where we're sitting on the upside. I have no idea what this is going to look like in the long run. There is if you really look at, like, for example, a moving average. Actually, let's make this guy, let's make him, oh, you're just the worst. Okay. Well, this is a moving average of 200 days. The 50 days, a little bit better. In fact, let me just swap this out really quick. And this is going to get a little overwhelming and I apologize. But this is basically all we're wanting to hear is this purple line. And this purple line, when you look at it on the daily, it has been, the price really kind of hovers around it and then it gets really overextended. And when it gets overextended, clearly has to sell off, not just to get closer to the purple line, but to give time for the purple line to climb back up as well. This is an average of the last 50 days, right, on the closing price. And so at a certain point when we get overextended, we really want to kind of pull back. This is called mean reversion. For those who went to math classes in college, this should sound familiar, but literally that's the entire purpose. Is it will become uncomfortable when things get overextended. And here we are getting very, very overextended. Here you could see how it kind of stays close. Like literally even this, like literally from here to here, that's still 10%. It was like, need to get a little bit closer. Clearly this is pretty overextended. This is probably like 20, 30%. That's 30%. So it's 30% overextended, which means, and maybe it may go up to here, but eventually it has to come to where we will always revert back to the average. and the mean. And so it will want to go down as this is also coming up. Now, this could continue to run for a while and separate even further. I'm just saying it can't go on forever. There's a reason this is happening. I think the presidential election is a part of it. The pro-crypto stance is a part of it. The S&P doing literally nothing for the last month has essentially made it to where it's like, would you rather have, I don't know, let's even start here. Would you rather have a 1.3% gain over the last 39 days, or would you rather have, this type of shenanigans, right? I don't know where my chart went. I'm going nuts. Here we go. And so that's the comparison, and that's obviously the hang up for people is they're not just going to sit there and watch their money be idle. On top of that, you just have FOMO. People are trying to jump in, right? So do we go to 100,000? Do we go to 110,000? Do we go to 102,000 in reverse? Man, there's literally no way of telling. When you're this overextended, this is irrational behavior, basically, hence the overextension. So irrational behavior becomes less practical and less predictable type of behavior. And so I can't guess anymore. The only thing I can guess on is these candles. And when I see big wicks at the top, that's a pretty good sign. If I see a big candle like this, actually, this is kind of interesting. This is literally what's called a reversal candle, where this is a red candle that's bigger than the previous green candle. This is normally a reversal sign. I'm not going to get into the details on why it didn't reverse because the wicks tell that story. But you can see this buying pressure here, What's interesting is this selling pressure on the daily chart. You got lots of selling. But when you go to the hourly chart, you'll see chunks of data that are really the opposite. Let me find a good chunk that, really, we'll just start over here where it started running. So literally right here, buying it up. All these bottom wicks, right, are big. Most of the bottom wicks are bigger than the top wicks. And that shows the amount of buying pressure on an hourly basis. But in aggregate, the day ends up ending and it kind of looks like there was all this selling pressure. So it's really hard to say. There really is a ton of volume right now that is coming in. You have people that are options trading as well, futures trading, all these derivatives that are coming out, which essentially are a way to, I don't want to say manipulate the supply of Bitcoin because you can't impact the supply of Bitcoin. But what you can do is you can create secondary markets, right? And say it's essentially what Vegas is. There's an event that's happening, a football game that's actually happening, and the odds of that game are what the odds of the game are. But you can go to Vegas and you could say, cool, I'm going to load up one side of the bet here and literally make it look like there's better odds than there really might actually be. Now, it's a silly example because all this is like information you can Google and stuff. But with public markets, you can't because I have no idea what's actually going to happen in the future. I have to use the data points and simply kind of come up with what options might look good. So that's really what I got for now. I'm pretty excited about what's going on. It would be absolutely amazing if this thing would just skyrocket to 100,000 while I'm making this video. That would be so freaking sweet. But it's probably not going to happen. At the end of the day, this is pretty much the exact same structure we've always had. And if we were to turn off this shenanigans, that is way too many things. But if we were to turn it off, and let me come back actually to this other one, and really look at this, are we just simply making another bull flag? Do we just get another 50% move up? It would be pretty cool. What's really interesting about the confluence of this chart too is we're literally, my Ring doorbell is magically on my phone all of a sudden. We've really kind of, I've really laid out the narrative that, and because it is the most logical and predictable thing, that we would probably fill this wedge and this would be a decision point. About 70% between here and here, about 75% is typically where you're going to see a breakout or breakdown. This is pretty bullish. And so it'd probably go up. But really what we might see that's interesting is it might push through and do some things and kind of come back down to this point. And that would just be really interesting to me. I know what you're thinking. We have different interests, and that's valid. But, when you stare at these charts long enough, they are just so fascinating because this is a language. It really is. I don't speak other languages, but these charts all of a sudden make sense. You know what I mean? These candles, they tell you a story. They read like a book. And while you can't really be fluent in them, it is a very interesting thing to say this candle represents, hundreds of millions of people's emotions. It is just really an interesting experiment. So we have a very clear open above this line. We have a big green candle. I don't see it coming down in the next 10 minutes. I think we're going to see $100,000 this week, as in like tomorrow, because we didn't have a midweek reversal either. Thursday, sometimes Wednesday is typically where you see a midweek reversal, where we get either a pump and then sell off, or a sell off and then midweek it'll actually reverse and go the other way. We didn't get that this week, which means there's just that much pressure going up. And so I'm excited to say that, I think we're going to see $100,000 this week. The weekends are very difficult. Obviously, we could see a lot of float up from retail investors over the weekend as well, cause even more irrational behavior. That's where the most irrational behavior is. And that could be interesting as well. That could easily push things up. But I think we might actually get there before tomorrow, because I mean, anybody who holds Bitcoin's like, dude, I want to see it. So I might buy some more. And even me, I've been adding to my orders. If my average was down here, when you add, now my average is here, now my average is here, now my average is here. And, I want to get an average that's probably lower than really where I think it's going to fall back to. Right. And I think it's probably going to stay above 80. I think it's actually going to stay above this green line if it comes down soon. So we'll see what happens, but I'm excited to be on the journey. I'm super excited. I cannot believe that we're seeing $100,000 Bitcoin. There's a very famous YouTube video. You can go Google it, of a guy literally making a video like this. And he's talking about Bitcoin's about to break $100 and how revolutionary this is. They can't believe it hit $100. That's crazy. And it happened again at $1,000 and at $10,000. And now at $100,000, here we are looking at a video being like, I can't believe it. And there literally will become a day where we'll look at it probably in the next 5 years and we'll say, oh my gosh, it's about to hit $1 million per Bitcoin. And so, man, I'm excited to be on the ride. This is not just a wealth building tool. This is a sovereign global money that is impenetrable by government, and it can't be controlled or manipulated by government. And there's a lot of freedom use cases for it. Most Americans won't recognize it because we don't have those problems. We exist in a very free country. But across the world, we are banking the unbanked with Bitcoin, and we are changing lives with this network, and it is really fascinating. I'd encourage you to go do some digging if you're interested, to learn more about how this is helping so many people. And the fact that we are getting wealthy off of helping people, man, that's way better than getting wealthy off of screwing a bunch of people, which is what traditional markets really are doing with their Wyckoff distributions. And so very excited to be on the journey. Man, feel free to leave a comment. I got to give a shout out to Joshua Haddad, who ruined my life by saying that I should have the audio on. And then what happened? I literally recorded it without the audio on. Can't believe I did it. I love you, man. I'm just giving you a hard time. But let's see where this goes. I'm excited to be at $100,000 with you guys. We'll chat soon.